journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, folks, Larry Pesavento for TFNN. I want to go through some ABCD stuff here. There's the ABCD and the Dow Jones. We had went a little above the 382 here by about 50 points, and now we've broken about 300 points. This is the 61% retracement of the move, folks, so it stopped here so far. Whether it's going to continue there or not, no one knows that. But with the S&P 500, let's get this up here because this is the first time that we've broken a 382, folks. Let me just show you here. I mentioned it, I believe. You'll see there was a 382 from yesterday. Okay, now let's move this down a little bit. And then you'll see here we rallied up to the 382 here today at 25, and then we had to move down. Now, if we measure this, you'll see that we're pretty close. I think we've already hit it, if I'm not mistaken. Yes, there's, well, not quite. We should get down here to this level right here, 672. So this is where we are now. The lowest so far has been 678. So we should get down here to 6672. But the fact that we broke this tells us that maybe that the pattern has changed and it could be to the downside. It's still a little early to tell, but that's what it looks like here real early this morning. Now, one other one that I want to mention to you now, this is not going to be a risk-free trade, but it's a trade that's certainly, if you like ABCDs, there's one coming up here right now here in the crude oil. You can see here we've taken out the highs at this level right there. There's your 382 on the long-term hourly going back to way back here. You see that? And since the end of July, that's the 382. Now, we hit it once or twice and came back down, but we made new lows. So this makes a new 382 right here. And it also is an ABCD coming in right up here at this 64.97 level. All right. Now, you only have to risk about 40 points on that, I would think. But that is an ABCD, and it is a valid one. All right. Okay. Now, one of the trades that we do have on that is working quite nicely has been the euro, and we want to get up here and show you where we are here with that, because there was the rally that we had yesterday. Whoa, wait a minute here. Let me get these things straightened up here, because these things, I got to get the hourly up. There's where we are. Get that up here. There was your 382. It was a little bit, we went in at the 382. It went up to almost the 50%. We sold it right here, and now we're coming down to this level right in here. Now, that tells us that we have a potential for a profit of A, B, C, D. We haven't taken this out yet. We've been here now, well, for yesterday and part of today. So this has held pretty good support so far in here. But once we get below that, we'd be looking at a profit objective of down in here. So that would be what we call the longer term ABCD that would take you down to that 1.618 expansion. Just these numbers, you just can't make them up, but there they are. The key here is, folks, we've been here since 1, 2, 3, 4, 5, 6 of the time here. So we're going to watch it and see if it's going to be meaning anything or not. But that's what we're paying attention to here so far. I'm watching very closely here with the hold on just a second. We got to get that crude oil back up because we just about made the old number here. Not quite. Let's see where we are. We're within a couple ticks of it. 64. Yeah, we're almost there. High has been 95. We're almost at 97. So watch that there. We'll see if it's going to be any good or not. Remember, folks, these are all trades that they have a probability of about 60%. But, you know, the thing that you have good about is your win rate ratio on this is around 65%. But your profit to loss ratio is 3-to-1. So if you did all the trades, wins and loses and everything, you're going to come out ahead. But it's just only pick and choose which ones you're going to do. That's not always the right thing to do. hey, there again, it's my opinion. Now, someone asked me a question this morning when I did the video on this, the fact that we had another really nice ABCD back in here, which was a really big one. If you remember that was the 382 off of that high right back there. Now, this is the same type of pattern, okay, but with a different high. This is a lower high, so you got a higher high, a lower high, a lower high, a lower high. So it's basically in a downtrend. Now, for today, it's been in an uptrend, but right now it's in a downtrend. I'm just bringing that to your attention to show you what we're looking at here this morning. Now, I've also been asked to take a really close look at the gold market, and we're going to do that right now. So hold on one second. Here's the gold. Remember, we talked about this yesterday because we had our big ABCD pattern right here. Remember, this was done over several days. This was a 382 retracement. You can see it there. It was. That gives you your top at 38.23. The high was 38.23. Okay, and now we've got an ABCD coming in. Guess where, folks? Right at the 382 from way back here on the 18th. Look at that. That is a beautiful buy pattern right here in the gold market. Let's just take a quick look at it. There's your low right there, all right? There's your A leg right up here, right there. I'm going to move it over so we can see it better. There's your BC leg, and there it is right there. And the low so far today has been 68. All right, it's supposed to be at 62. So watch this here. We're with it really close. So watch this right here at 62 if we get there, because if you wanted to take a calculated risk, you're certainly trading with the trend, aren't you? And you're only down $60 from the high, and that's two harmonic numbers, so this is a pretty good spot to take a look at. So far, the low is 66. We were looking at possibility of 62, so we'll see if it still hits that while we're on the air here and find out whether it's going to be a good one or not. So those are the ones that we're watching here this morning. Now, on the really long-term part of the weekly part here on gold, folks, it's up in the stratosphere. As you can see, there's a little bit of a tail here on the weekly so far because we backed off $60. That doesn't mean very much right now. The real key here, we'll just get this up here and show you. The real key is going to be this one right here, because if we break below this, that's going to be the first time we've broken below a 382 pattern in a long time. And that's why it's so very important. But this is the ABCD. Let's blow it up so we can make sure we did it correctly. Sometimes these things are a little sensitive to there's the high right back here, which is at that 23 level. So you move that into right here, put that there, move that over right there, and it says it should come into at 70 is what it looks like. The 382 here, 70, it would have hit that one, but the 382 is right here. There's a little bit of a difference. Okay, so, and looking at this, there's another one. We might have just did it, folks. I'll tell you why. Just looking at this on a real short-term basis, yeah, it's probably what's happened. Yeah, that's probably it. We have a little ABCD here right at 64, so we're starting to get a little rally in here. Still, this is a powerful number, but so is this ABCD. Comes in right there at 70. The low has been 68 or 64. That's pretty close. So what we're watching now is to find out what happens. We've rallied so far. We've rallied $7-8. Doesn't really mean very much from that perspective as we're watching it. But this is going to be interesting. We need to take a look at the silver market for you folks. So hold on just a second, and because it's been very strong again, and backing off a little bit today, but not much. As you can see here, we had a big we've had an outside day today in silver. That's important.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Okay, folks, I have to make two corrections here. First of all, the silver has not taken out the previous day's lows as of yet. You can see the ABCD up at the 786, but you haven't. But when you look at this on the daily chart, I forgot to refresh it. Let's just make sure I get it correct. Yeah, now you can see that's not an outside day because it just did this. So that's all I wanted to protect. Also, I've been corrected on something else too, and that is on Nvidia. Let's get this up here. I looked at it, and the person that told me is absolutely correct. Nvidia starts with an N, correct? Let's get there. Is Nvidia with the N? Where is he? It should be right one little bit lower. There we are. We're going to get this up here. Okay, now let's get the weekly chart up. Okay. All right, now it's been here for this many weeks. The high has been 184. The target was 187. But you see this right here? This took this out by $0.50. So the high was not 183. It was 184.55. That was made this week. Looking at this on the daily, I think it was that big day. This was made several days ago. There's the new high right there by just $0.50. Okay, there's that 184.55, and there's where we are right now. So I thought it had made the high back here, but on that day, I don't remember what the reason. Who knows what the reason was? But you can see there's been everybody that's buying this back in here. Unless you bought it really low, you haven't made any money because it's got so much advertisement coming through that's free, and it's not moving. We've seen this in Apple before. Let's look at Apple. Now, Apple, remember we were looking at 257 as a potential high in Apple. Hey, this is ABCD, folks. I don't know much beyond that. Okay, there's where we are. There was our 257 right there. Now we're trading at 251. I don't know if that means very much on the long term, but sometimes they only last a few days. Sometimes they last longer. So that's what I was watching and trying to tell you what I'm looking at right here. Okay, now let's move on, and I want to talk to you just a second here about, hold on one second, is the Treasury bonds. And then we're going to take a look at Tesla also. And there's where we are right here. Okay, here you can see we finally made the 382 up in here, folks. I sent that out of the video last night. I said that's a nice 382 here. Went a little bit above it, but then now it's starting to work pretty good. You got about a $400 profit in it right now. Your stop would be right above here. So only risking $200 so far. And then if it gets down into this area and starts breaking this, then you've got some serious move coming down. Folks, let me walk you through something, okay? Here was your high back when the Fed gave us this dog and pony show. Remember the first one back on the 17th? Okay, that was let's go remind ourselves where it was, because that was the weekly ABCD right there. There it is right there. That was the weekly. All right, so there it is right there at 1728. The high was 1821. And there's where we are right now. Looking at this on the hourly again, you'll see here that we are starting down from this, okay? And this is a 382 retracement right off of that high right there. And Gartley said, Gartley didn't say that. Tom Hugard said that. Sell the first 382 retracement. Sometimes they work, sometimes they don't. Anyway, that's what we have looking on right here, okay, in the Treasury bonds. Now let's take a quick look at the Treasury notes, because that's been that's a bigger market at 6 times the size of open interest, and we'll get that up here right about there, and you'll see how it's doing today. Let's see. Oh, okay. You can see here. Here's where we are coming down. It hasn't taken any prisoners here. We're going to look at the hourly now. Probably hasn't even had a 382. Let's just double check here. Yeah, I think we did. There was your first 382 pattern right here. So we'll clean that out. And we had the second one coming in from this level right here, from this high. And where does it do? It went to the old 382. Actually went 3 or 4 pips above it. And now we're starting to come down. We're almost ready to take this out. And when that does, that means we're starting to head down. Folks, interest rates are going higher. They're not going lower, okay? That's the main thing that we want to be watching here as we keep moving this around, okay? So let's move this around here for just a second here. Hold on just a minute here. And hold on a second. You can hear it's Wednesday trash day, so nothing I can do about that. Okay, sorry, folks. Just give me a second. I want to talk to you about another one that I like on a really long-term basis, and that's this darn wheat market. We've had a nice rally off of that bottom at 09. Let's get that longer-term number that we were looking at down in here. See, there was our big, remember it was 09 was the number, was the longer term. That was this big pattern right down here. We got to 07 and now we're up here. We've taken out the high, but we want to watch this one. And I'm watching it very closely because we've only been down to this level since 2016, folks. 9 years ago has wheat been this close. The last time it was at 9 in 2016, it went from $4 a bushel to $13.50 a bushel in 2 years. So people will not stop eating cookies, cakes, and pasta. That's not going to happen. Maybe they will for a while, but not for a very long time. All right? So there's what we're paying attention to here right now. Now let's take a quick look at Tesla, because we have a situation in the family where our position had a huge, let's get the daily up here. So you can see here, the person bought this right in here, all right? And it came up to this level right here, and I was recommending to sell it at the 786, which was at 27, as I recall, 27, and now it's 39. Now, as of yesterday, looking at this on a smaller time frame, you can see there it was when it took this low out, you see, it looked like it was a pretty smart idea to be out, because then it came all the way down to 23. But look where we are now. We're almost ready to go out into new high ground. So the $64 question is, do you rebuy here, or are you satisfied with your gain and wait to see how it handles this level right here? Now, looking at this on a 4-hour chart so we can see the bigger swings. You see all these swings up in here? Now, maybe this is going to be something huge, folks. Now, you know, if you got out of the trade at 427, it's at 439, and it gapped up above that level. Let's look at the daily. You'll see that I believe that's what it did. Yeah. Well, you can't see it on this because it's too small. Let's get this up here so we can see it a little better. There it is right here. You can see that a little bit of gap this morning, and that was it. So if you got out there at 27 and you thought it was going to go higher, you could have bought it right on the opening, and you'll be okay. Frankly, I think, only 1 or 2 people get the high, folks. God and her closest friend, one of the apostles. I don't know which one of the apostles it is. Larry, you better quit joking about religion, because you got to be knocking on that door sooner than you might think. So let's forget about that. There's where we are. I think, look, you had an ABCD here on the hourly over the last couple of days. That was pretty good support, and that's all it is so far. And even then, if you look at this, your target on this is not going to be that much higher than where it is right now. That would take you up to about 52. So you're talking about another $10, $12. That's about 4 or 5%. Okay, so I wouldn't mess around with that one too much. If you bought that thing that we liked the other day, that SPX, it's starting to work a little bit. So don't let it go to a loss. That's basically the bottom line of what we're looking at. We're hopefully going to have Stan Harley here today, but frankly, it doesn't look like Stan's coming in, but we'll have to do one thing at a time as we're saying this. So stay tuned.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors. This portion of Trade What You See is brought to you by Direction's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direction.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direction.com. Read carefully. Distributor Foreside Fund Services, LLC.
Okay, we're back, folks, and we are filled in the short crude oil at 64.97. The high has been 0.5. So I think that if you put a stop in at, say, 65.25, you're only risking about $300. So I would put the stop at 65.25 in the crude oil to protect ourselves. Now, we've got a real interesting situation happen, but Stan's not in the house now, folks. So let's concentrate on the gold here, because this is a really important spot here in the gold. Okay, here's the number we're looking at, which is 62. All right, we're now 67 coming down. We rallied up here, 72. I know this is micro stuff for most of you, but we got a lot of stuff going on, and we know how important these 382s are. That's what I'm trying to impart in how you can calculate your risk. Now, you can see the ABCD that I drew here. This is the kind of stuff I'm going to be covering tomorrow, folks, from 9 until 12 on a live session, and that's what we do. But I want to go through just a second here just to show you. If we want to do it, all you have to do is email Tommy at tfnn.com, and he'll tell you how to get on and everything. There it is right there. That comes in at 370. The low has been 64. Now we're coming down. We're going to get here. See, we're only a couple bucks away. So we have our limit minder in, put it in right there. Okay, put that there right now. I've got an order setting in there to buy at 63. That's a new low. It's going to be $1 ahead. I'm risking $5. I got to stop at 37.58 if I get hit. So I don't want to stand in front of it. All right. So that's what we're watching here in the gold market. Here you can see on this one here, this backed off a little more than the 382, you see, but that's what I'm looking at. I've got an ABCD, so my first one's been hit. If I bought at the ABCD here, I'm already out $4. So I'm waiting to see if I get to this level right here, which is another new low, and then we're going to find out if it has legs. So let's move on here and talk about the British pound. We have a couple questions. Everybody watched the festivities over there in the UK the other day, and they want to see how the pound is acting. And let's get it up here right now. I haven't looked at the pound just recently. It was still coming down a little bit. We thought we would be, but let me refresh this, folks, because I had some data problems here these last few days, and I'll get it straightened out. Okay, now here's where we are. Okay, now we've had a pretty big break. We saw the ABCD here, correct? Now we want to see what happened since that time. So we go to the hourly chart. We were in the euro, folks. You shouldn't do them both. If you're going to trade the currencies, you want to trade the one that is the weakest. And of course, this one wasn't the weakest at the time. It was the strongest. Let's just refresh this, and we'll get this up here. Come on now, please refresh. Oh, this is Sunday, that's why. All right, there was the first, after the high was made here on the 17th, that's when the Fed talked, okay? Now, you wouldn't have been filled on this because it happened so doggone fast. You had your order setting right there when it happened. You may or may not have been filled right there at the 382. It's an hourly chart, so you could have been filled. There's your strong move down. There's your 382. There, it finally did it. Yay, Billy Ray. Now, you can see here today's high. Now, we were doing the euro, but if you were doing the pound, you're going to do pretty much the same thing. Go to the last major high, and your 382 came in right here, just like it did in the euro. Euro went a tiny bit above it, but that's what we're watching right now. That's still holding relatively good, but you got a profit in this, so you don't want to let it go bad. That's the main thing that you want to really keep a really close eye on. All right, so let's move on here and check out something else here that we want to talk about. And that is the Japanese yen, one of our favorites. And hold on a second here. I'm probably going to have to miss a few days next week, folks. I'm doing a legal case for a very prestigious law firm. I was against them a month or so ago, and they kept my phone number and my business card, and so I'm asked to help them this time. So it might last. It's in federal court, so I've got to wear a tie and all that stuff. But it might be over today. It might take 2 days, but I'll be back with you no matter when it is. I'll keep you all informed. The charts will come as expected, but I'm right in the middle of the day. It's going to be pretty tough. It doesn't happen very often, but this is one of those things that I like to do. Now, let's take a look at the Japanese yen. That's right here. Hold on. I haven't told TFNN. Well, I guess I just did. I just found out about it. this morning. So here's where we are right now. There was our 382 right back here. I told you how important that was. We'll refresh it here. And there's where we are now. We're going, oh, look at this today. I bet you we had another 382 here today. Let's just double check here. There's the daily. There was yesterday. So let's just move on here to the 60-minute. And there we are. Oh, it's not going to make it. I can tell you it's real close, but no cigar on this one. There was your low. And there was your high, and you missed it by a whole lot. You missed it by 4 football fields. It would have been down in here, and now you're going up. So the one thing you can do, if you're in a real strong trending market like this, you can draw a dynamite triangle. In other words, take your previous highs like this, okay, and just draw that trend line like this, and that makes it a dynamite triangle. And you can see once you pop above that dynamite triangle, that tells you, and if it goes back below it, you're out. I mean, these are that good, folks. There's got to be buying above here. And if it doesn't, then you get out. Same thing with this one, like here. See that one coming down like that's a 135? Look what happens when you popped above that. Boom, away it went. So we'll be talking about dynamite triangles tomorrow because they work very well when you're looking at, markets that are trending really strongly, like we've had here in the yen and some of these others, the pound and the bonds and all those things are acting pretty good from what we're watching here right now. Okay, now how much time we got for the next break here? A minute and 40 seconds at 2.5 hours. Let's take a look at Goldman Sachs. This is the Big Daddy Rabbit, folks. It's over 800. Well, it was over 800. Let's see where it is right now. And we'll get it up here. And, well, it's backed off a little bit, son of a gun. Our high yesterday was when the Dow was going wacko, was 825. Now we're at 797. But, folks, on the weekly basis, this flat shattered this thing. I mean, this thing should have stopped right here at 762, and it just kept going. So that was one that didn't work very well. That's why the market in the Dow Jones exploded even higher. Got to 47,000. Believe it or not, that's almost 50,000 in the Dow, folks. On July the 8th of 1932, it was trading for 42. Holy moly guacamole. Isn't that something? That's a big deal. Okay, let's move over here. And we have a question about one other stock. Let's get it right up here, which is JP Morgan. JP Morgan is right there. That made a new high the other day, and it's coming down. Oh, it made a new high today, too. Wow. Very important. Take a look at this. This is an interesting situation. Yeah, see, there was our high here, which was at 315, and then our high yesterday was 316, and our high today was 316.58. It made a higher high by 2 cents. Well, that's my 2 cents worth, and it's shut the front door. Let's look at the ABCD on this. Hold on. We'll be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
For traders who crave risk, Direction's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direction. For up-to-date pricing and performance, go to Direction.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direction.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Well, okay, folks, we're watching the ABCDs of the biggest and most successful bank in the world. And from my opinion, it's JP Morgan. You can see the ABCD patterns here. There's your A, B, C, D measured to 04. It got to 05 and then backed off. You'll notice that the back off was almost exactly, let's move it over here, almost exact, well, it was exactly like the previous one. Where do we get that from? Andrew Lowe in his book, Non-Random Walk Street. That gives you an ABCD to 1673. The high today was 316.58. So missed that by 16 cents. So that one didn't work. That's a little Freudian slip, I guess, folks. All right, let's move this out of the way here for just a second. I want to come back here and cover something else in the commodity markets that I need to, and that is in coffee. I know we have 2 or 3 people that are trading coffee, and they asked me to double check, so I will get it here in just a second. And there's our coffee. Should be down today. Let's see. Well, it's actually bouncing up. It came out. Let's take a look here where we are. All right. Here's where we are. We made it. Let's just get this here on the daily here. We had the big move up here. We had a move down. Let's go to the hourly to see if it was telling us it wanted a gap. Yep, there we go. This is really nothing, folks. This is just a small rally in a bear market. As you can see, it's just a little above the 382 of that move, and the 382 of this one is quite a bit higher. Let's just move this over for just a tad like this. You can see we're going to probably get up here to 380, up another 12 cents, and that's going to be a really good 382. Now there is a small ABCD here on the bottom, folks, from the A, B, C, D. Let's just double check to see why it stopped right where it did. And it's having a pretty good rally from today. We're up 16 cents is quite a bit. See, it didn't even quite make the pattern on the downside. So this is just a bear market rally, from my opinion. And let's stop this music and raise the rent. Okay, get that out. What we're watching for on this one now. Well, guess what? My remove button is not working. Ah, man, that's gotta love that. Nothing I can do about that. Well, there is something I can do. I can delete all, and that's what I'm going to do. And then we're going to draw it back from here. There's we are from our center right back there. And we'll be at 377, up another 10 cents. And you'd like to see it do it over 2 or 3 days so you get an ABCD to line up. Because this is what we're looking at right now. It's just a little bit lower low. Not even a lower low was made yesterday. And then we're going to find out there's an ABCD at the bottom here. But if you're really bearish, you got to sit through these, folks, because the worst thing can happen is you lose your position. And that, at least that's what the storybooks tell us. Hold on a second here. Let's get up here and take a look at the soybean meal. These are trades that we've been waiting. Oh, we still got a chance, folks. This is good. We're coming down, looking good. Billy Ray, feeling good, Lewis. I like this one very much. And you know what you should do? Be absolutely scared to death of that. Okay, now, here's the bottom part here. See, I want to buy it here. There's the old low at 73. I want to buy it at 72. I want to take that low out right there. It's scheduled to go to 65. Now, maybe it's going to get there, but I'm going to be buying at 72 because if it takes that low out by just a little bit, you know, Larry, when you look at this, that's really silly to do. Cancel that. Let's buy it at 266. Yeah, that's silly to do that. I don't know why I did that. Being overtired, I guess, but I believe in ABCD. Why the hell would I buy it if it made a new ground? It's going to go here. So you want to buy it? Let's buy it at 266, folks. That's where you want to buy it. Catch me with these errors, folks. I need it. 266 is going to be the buy because there's your ABC. Oh, there's why I was buying it at 272. Not so fast, buckaroo. Not so fast. Hey, I did something right. No, let's stick with it. We want to buy it at 272 because that's the ABCD for the whole month of August and September. What's wrong with that one? Hello, operator. So we're going to buy at 272. All right, and we're going to put a stop at 266. You're going to risk $600 to be a farmer for soybeans. Bear with me a second here. Stop will be 266. Well, it was supposed to. Let's try it again. Stop will be 266. All right. Okay, let's get done with that. Let's take a look at what we have going on right now here in the markets, and that is in the crude oil. We'll see where we are here. All right, it's now trading at 64.92. So you've made $64. You got enough for a really nice Big Mac. Anyway, keep your stop working at 65.23. So you're only risking $250 if it's wrong. Right now you have a small profit in it, but that is an ABCD. You can see it's just spot on perfectly right there. And if it gets up here, probably wrong. So that's what I'm looking at. Just the amount of money that you have to risk to see if you're right, folks. That's the whole key to seeing what we're looking at here, being right or wrong. Hopefully we'll have Stan maybe tomorrow. There won't be I won't be broadcasting on Friday, folks. That's going to be a travel date. And then, like I mentioned, I'm probably going to be gone. Hey, they might even settle it over the weekend, but it's going to be in federal court. So I've got to take some time to do that. And I remember I have to call Tommy, remind myself of that. Yep, I wrote it down. Okay, that's what we're watching here, looking right now. Okay, now let's move over here and take a look at these Treasury bonds because they continue to weaken up. And this has a potential. Let's just get this up here on the long-term weekly, folks. We hit a major one. Now, we're only down in the second week. The last time we had one of these, it was down 1, 2, 3 weeks. This one, 1, 2, 3, 4, 5 weeks. We're only 2 weeks down. So the only place you want to be finding support now in the bonds is if you drill this like this. There was the 135 pattern, 135. That was a perfect 61% retracement off, well, almost perfect. That says 0.65, but almost perfect 61 ABCD right there at 13 and change. And where did it do? It went all the way up here, and here's where we are now. So I believe we're going to be coming down into this area right here. Folks, I want to bring this to your attention. To me, it's very important. What's going on with all this AI stuff? You remember when they told us about negative interest rates, how wonderful that was, and everybody believed them? Hello, operator. Be careful what you hear. It's not how much money you make. It's how much money you don't lose, and therein lies the rough. So that's what you've got to do as you're watching these things explode here. But this is still bearish, folks. My long-term projection on the low here at 618 on the long-term monthly chart is at 97. That's $9,000 from where we are right now, folks. So we've got to be watching that one very, very closely. Okay. All right. Now we move over here and see what else we got going here. And let's look at Tesla. Tesla's picking up speed now. We're back almost to 40. We're going to be taking a high out here. The old high was 44, so we've got just a little ways to go, and that should get there. And I'm going to put this in here because the next time we're on the air, which should be tomorrow, we're going to find out if we made that particular pattern or not. Remember, folks, it's a market of stocks, not a stock market, because every stock is a little different. Let's take a little break. Got 2 questions coming up, so we'll cover those when you get back. 877. Oh, that number doesn't work anymore.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Okay, folks, we're back. And as you can see, this is Alibaba. Back about 5 years ago, it was the hottest stock in the world. You can see it had the 3 drive to a top pattern back in here. There was a big target measured right to there, so that was completing. Then look at this on the way down, folks, 382, 382, 382. And then for the next 4 years, Jack Ma, who is the equivalent of Elon Musk from Hong Kong, and Jack said, I'm not selling it down here. But now he's got a chance. You can see here, we're rallying back. Let's clean this out just a little bit to see how close we are to the big 382 on the whole thing. And guess what? We gapped above it today, so it's doing that. Let's see if there's an ABCD pattern in here. And had good earnings, and so it should get right about there to 87. So we're going to mark this, because when it gets there, we want to check and see if ABCD actually work, because there are times when it doesn't work. Let's get this up here to get it right. There we are. So that's what we're watching right here in Alibaba. Now, someone asked me to check the Dow Jones Transportation. That's IYT. It's an ETF. Now, I know it hasn't made it. Well, I don't know for sure, but let's just get up here. I wish old Richard Russell was still alive. There it is right there. Richard Russell said they had to be up together, so let's see if we did it. See, the Dow Jones Transportations, here's where we are, have not made a new high from July, way back in July. See, there was a high, matched this high. Yesterday we matched the same high, and so we haven't made new highs. Now, that was a big warning sign back in the days when Richard Russell was the king of the hill there in, or down in Marina Del Rey, Newport Beach. And he was on Luke Kaiser all the time, being quoted all the time. He died at 96, but he believed that all these indices had to go up at the same time. The Dow Jones, the utilities, and the transportations had to move in unison to make it a bull market. But things have changed so much with the FTs, with the ETFs and all that stuff. Not so much. We'll see you on the flip side tomorrow, boys and girls, and may God bless.